In less than few hours, Union Finance Minister Nirmala Sitharaman would rise on the floor of the parliament and present her fourth budget. Even though this time the environment, the mood, the bent of the economy, the earnings cycle is strikingly different, expectations are running very high. Indian economy has survived the COVID storm. The economy has revived in last 1 year, but most important, what can the budget do to ensure that we just thrive in this environment? Now, the global backdrop is slightly noisy. Inflation is high. Interest rates are likely to go higher. Could that really change the settings of the economy? So what can the finance minister do to ensure that we are insulated from the global queue, but we are not isolated with what is happening in terms of the recovery cycle? Now, budget is all about numbers. And for a change this time, on the tax collection front, the government has no problem. In fact, it could be a problem of abundance. Yeah, I don't remember when was the last time I said the government has a problem of abundance. The tax collections or the revenue receipt, to put it simply, will see an uptick of 30% projected, which is way above what the initial estimates were. So indirect tax collections were high, GDP was high, and even corporate taxes have been very high. The most interesting turn, I guess, for the economy can be explained in this one simple graphic, the vaccination drive. And that, in a sense, the sum and summary of why India has survived and revived. Now, this is, in a sense, is a very proud moment for all of us. This has made the difficult look easy, and the entire vaccination curve of India, how it has moved, and the adult vaccination, how it is now vaccinated, I would say fully vaccinated. If I look at the most important tailwind, for Indian market is right now the corporate revival. The corporate balance sheets are low on debt and they are high on capacity utilization. CapEx has started. So from a period of earnings drought in last couple of years, for a change now, corporate India has got their animal spirits back. So low interest rates and a real boost to the manufacturing sector have given a very strong impetus for India Inc. But the challenges can be summarized in the next few graphics. And the biggest challenge, I think, as always has been, how do you really reduce your dependence on the energy cost? Crude prices, same time last year, were at $55. Now they're at $90. And US bond yields, which were almost at 1, are now nearing 2%. Now this 1% change should be looked into context, which is 1 becoming 2, or 1 becoming 1.8 is more than a 50% surge in the global cost of borrowing. The other challenge is that our fair weather friends, foreign institutional investors, they've been selling, and the selling has been rather excruciating. If you add up the data for the month of November, December, and January, they do not give you a comfort. So we do have a impact of rate tightening, which I think clearly is now visible in the way how FI selling is moving. So the challenge in this year's budget is to manage liquidity, B, ensure that inflation in a sense is taken care of, and also we need to ensure that not only there is smart expenditure, but expenditure needs to be done with the context of interest rates, which is that how do you ensure that despite inflation, the cost of borrowing for the borrower remains low. So the backdrop is different, environment has changed, we are in a good spot, and if this is a no harm budget with focus on smart capital expenditure, I can tell you an oversold market will start doing cartwheels.